The forms of business organizations. The first one is sole proprietorship, and it is also called single proprietorship. And in sole proprietorship, there's only one owner. It is owned by one person and usually adopted by small entities. Okay, and it is easy to set up and is the least costly among all forms of ownership. Okay? The owner faces unlimited liability, meaning the creditors of the business may go after the personal assets of the owner if the business cannot pay them. So the owner has unlimited liability. Okay? And next form of business organization is partnership. And partnership, it is owned by two or more persons. And in business partnership, uh, two or more persons contribute resources to the partnership for a profit. Okay? And the partners divide the profits of the business among themselves. In general partnership, there is what you call general partnerships. All partners all partners have unlimited liability. If it is general, then the partners have unlimited liability, meaning the creditors, if the partnership cannot pay the creditors, then the creditors can go after the personal assets of the partners. However, there is certain thing as limited partnerships, and in this case, creditors cannot go after the personal assets of the limited partners. However, in every partnership, there should always be at least one general partner. And next form of business organization is corporation. And corporation is a business organization that has a separate legal personality from its owner. So it's separate. Corporation has its own personality and aside from the owners. Okay. So the ownership in corporation is documented by the shares of stocks, and they are called stockholders. So the stockholders have limited liability, but they also have limited involvement in running the affairs of the company. So the stockholders' liability uh, with the creditors is only up to the level of their investment. As far as management is concerned, it is the board of directors, an elected group from the stockholders who controls the activities of the corporation. And the board of directors will appoint the president and the CEO of the corporation to run the day-to-day affairs of the business. Okay, let us now have a comparison. Let's compare sole proprietorship, partnership, and corporation in terms of capital, management, decision, life of business, and extent of liability. So let's compare sole proprietorship and partnership and corporation. Okay, in terms of capital, the source of capital on sole proprietorship is from owner. In partnership, obviously, it is from partners. And in corporation, it is from public. So, as far as sourcing of capital is concerned, you have to expect that corporation can have a huge capital in comparison with sole proprietorship and partnership. As far as management is concerned, sole proprietorship is managed by the owner, partnership is managed by the managing partners, and corporation is managed by the board of directors and the president and CEO on the day-to-day affairs of the corporation. As far as decision is concerned, sole proprietorship, the decision is very quick because it is only decided by the owner. And in partnership, the decision has to be made by all partners. Okay? In corporation, the decision will be made by the board of directors for the policies, and then the president CEO again for the day-to-day affairs of the corporation. In terms of life of business, The life of sole proprietorship is very limited because if there is something happens to the owner, then there's a possibility that the business will be terminated. That's also true with partnership. If there's something happens to one of the partners, then there is a possibility that the business operations will be terminated. But in corporation, the life of business is unlimited because if something happens to one of the board of directors, it can he or she can easily be replaced, or even the president and CEO. Okay, so the affairs of the corporation will move on, will continue. Even several directors, stockholders will get out from the corporation. In as far as extent of liability is concerned, in sole proprietorship, the liability is unlimited. Okay, meaning again that the creditors can run after the personal assets of the owner. And in partnership, it's the same thing. If a general partner, then the liability is unlimited. In corporation, the liability is only up to the extent of the investment of the stockholders. So these are the comparisons of sole proprietorship, partnership, and corporation. Okay, there are other types of business organizations, and these are the limited liability company, abbreviated LLC, and these limited liability companies are hybrid forms of business that have characteristics of both a corporation and a partnership. An LLC is not incorporated, hence, it is not considered a corporation, but the owner enjoys limited liability like in a corporation. An LLC may elect to be taxed as a sole proprietorship, a partnership, or a corporation. And the other type is cooperative. A cooperative is a business organization owned by a group of individuals and is operated for their mutual benefit. The persons making up the group are called members. So cooperatives may be incorporated or unincorporated. Okay? Examples of cooperatives are water and electricity, the utility cooperatives, cooperative banking, credit unions, and housing cooperatives. Okay, these are the other types of business organizations: limited liability company and cooperative. Okay, class, I think that's it for now as far as the forms of business organization is concerned. Please send your questions to general page of MS Teams. Remember, class, the only stupid question is the one that goes unasked. Bye for now and have a nice day. Okay? So,